Hey, how's everybody doing? My name is Matthew Wingel. I'm the president of Canary Jones Holdings LLP. And, as we begin to discuss a little bit more of the recession chatter and the economic volatility coming a bit closer to home, affecting both families and businesses with cost of living, inflation, and overall market volatility, we see that the financial world is a little bit on fire right now. And so it would be best to share with you what is Canary Jones tracking on the Dow, and today we're going to make a pretty compelling case to share that there is some more downside to the Dow, possibly a large amount of additional downside. And so, of course, any information that we share with you today is not to be considered financial advice of any kind. All investments carry considerable risk, and losses can exceed beyond your initial investment. With that being said, at Canary Jones, we are particularly expert in tracking and identifying trends. And in this particular instance, looking at the overall Dow, we're tracking a trend that's known as a broadening wedge. Now, this broadening wedge is illustrated by the blue and the orange line. What you can see is actually two characteristics of this particular wedge. One characteristic being that we have an extremely flat bottom support line where prices retreat and then make an advance and retreat and make an advance. And at the top, we see an ascending resistance line showing us that prices are incrementally obtaining higher highs. With that being said, what is it really showing us on this broadening wedge? Well, it's showing us that there's expanding volatility over time. This can be shown in different patterns where we have two expanding. We have an ascending and a descending bottom, an ascending resistance, and a descending support line. We have very similar where we have now, in this instance, we have a broadening wedge where the top line is expanding and the bottom line is staying pretty flat. And so this makes sense, that we see expanding volatility over time, particularly because of the events of the last 10 years, but also because the Dow is comprised of 30 of the largest stocks within a bunch of varying industries. What is support and resistance? Well, support and resistance is the two areas between which a price is oscillating and change. So when we're watching and tracking a trend, we are examining the price oscillation between where it's obtaining support on the bottom of a support line and where traders are getting a little bit more hesitant and either selling or becoming a little bit more cautious. Between these two support and resistance line forms are trends. And so over time, there's micro patterns that's going to create a larger macro pattern, a larger long-term overall chart trend. And so what we're examining is this broadening wedge as the overall macro pattern for the Dow. What occurred in January of 2016? Well, we can actually see what occurred right here, and this is referred to as a breakout, where the price is breaking beyond where it's being held and resisted. Now, why did this happen? Well, if we can recollect, we had a enormously pro-economic presidential election, which allowed traders to gain confidence, and they broke the stock above the resistance line. This is showing us that the bulls are now taking control. It's been trading in between 2 points, this battle between the bulls and the bears. And this election fueled a catalyst to cause a large bullish reaction, very strong bullish reaction. After this breakout, we saw a very strong rally, which lasted all the way up to about Dow 36,000, almost Dow 37,000. Okay. Now we can actually see that when the stock breaks out, there's something known as a test. And you can actually see that the stock pulls back slightly and tests this line. In this case, this old resistance line is being tested to be determined if it's going to become new support. The stock just broke out, but the bulls aren't 100% convinced. We're trading at all-time highs here. We Is this price going to hold? We want to know this before we make our entry. And so what this does is it causes a test right here along our top resistance, now turning into new support. Because this broke out and we saw that the price was going to hold, traders took and acted on this. What happened was between 2016 and 2022, we're seeing roughly the stock market doubling in value. Now, to be 100% honest with you, we all know that this isn't from growth on the GDP. This isn't because of excessive cash flow on the balance sheet. This is because of inflation, okay, where our M2 money supply has gone up $6 trillion within the last 2 years. It's almost outrageous. It's causing balance sheets to look like there's more cash, when in reality, this growth is only spurred on by inflation. Now, again, traders aren't always going to be convinced that these prices are going to hold. And so we had another pullback and another test, which took us down right in May of 2020. Now, what had just happened in January of 2020? That's right, the coronavirus. So it only makes sense that at this point, traders were becoming a little bit weary. They were becoming a little bit skeptical and they weren't sure if prices were going to hold. That's what causes this test on the lower line. And where did this test occur? All the way down to Dow 18,000. Now, with this being said, I personally believe in the resiliency of the American economy. I personally believe that many people overlook how strong economically we are with the technology that keeps us competitive. The Bears have been losing for over 100 years. So I like to make fun of Bears or at least make fun of the perma Bears who are always waiting for the market crash. But with that being said, the coronavirus caused a pullback to Dow 18,000. The price was able to hold. It continued to advance, and within these 2 years time frame, it rose all the way up to 36,000 points. What Canary Jones is sounding right now is that we saw a reversal implication at the height of this pattern. And what we're expecting is to see increase of downside activity, bring us all the way back anywhere in between 18,000 to Dow 20,000. If this occurs, we are going to see strong economic indicators that are showing us we are in a full bloom recession, potentially even a depression, and that this was caused primarily through the 2 year shutdown through the pandemic. If the price is able to obtain this new high, and again, you're seeing that even though we're seeing some tests along the new support line, if the price continues to hold, it's very likely that this could represent the final entry position, the best entry position that we will probably experience within our lifetimes. Now, that sounds great. And why would it be? Because if the price holds, we're going to see strong bullish reaction that's going to continue us into a breakout. And we're going to continue to consolidate into a new macro pattern. Each time we see a breakout, the price is going to consolidate because traders are looking for the optimal price of entry. That's what's going to occur, this oscillation back and forth. Now, what's happening now? Inflation, market volatility, supply chain issues. Wouldn't it make sense that the Dow is more likely to see a hesitant retreat for some time to allow the effects of the pandemic to unfold versus traders are going to be so gung-ho to start making new investments, accumulating rapidly at the downturn. Well, this is the difference between professional investors and amateur investors, is that right here, the amateurs are selling. They're selling their position. And who's obtaining that position? Institutional investors. So the institutional investors are also looking at these support and resistance lines, and they know that the small fish is going to become very hesitant and weary. This is going to allow them to drive prices down so that institutional buyers with a lot more buying power will be able to obtain stocks at the cheapest price possible, whilst all the while scaring you into selling out of your shares. Now, like I said, this sounds great. If this occurs and we see this entry position available, Canary Jones is planning to make some significant investments here. However, what could go wrong? If this chart does not hold, or we see an increase of economic volatility, it's very likely that we're going to see a possible market crash. Now, where the market would crash would be down to about Dow 7,000. Now, this is the point of no return. This is the point where the market has fallen so substantially that the amount of time to recover is going to be very difficult to gauge. It could take many years. And so by at this point, we've already lost significantly. However, 2008, we saw a retreat to this position during the recession. After 9/11, we saw a retreat to this position, and including the dot-com bubble. Now that we've made new growth, we're seeing a retreat to these bottom new old support line, which is old resistance line, which is becoming a new support line. So this is a favorable entry position that we're tracking, is this Dow 18,000 to 20,000. It's very possible that we could see lower protrusions all the way to 18,000, such as shown by this lower wick here. But if possible, and it makes this new high, it's going to signify an entry position to at least oscillate between the 20,000 and 35,000 points, which is quite amount of growth, and there's a lot of room for opportunity within that. However, we do need to be constantly watching and monitoring what occurs during this line. If we see breakdowns below our support line, which would look something like this, it's very likely that we're going to see the change in direction to continue this downside trend. The price will continue consolidating, and it will consolidate in the bear's favor. So this is why we're saying that Dow 18,000 is very likely. This is the chart pattern that we're looking at on the Dow. We appreciate you, everybody, taking a look at this. We open for any comments, questions, concerns. And if anybody else has an opinion on this, we're certainly able to provide you some assistance with doing and performing your own analysis. But what we're seeing is a pretty compelling case for Dow 18,000, watching for the potential of a crash, and seeking within our possibility the best final buying opportunity that will exist within our lifetime. So thank you, everybody. Happy trading. Good luck out there, and stay safe.